when you're trading pure price action, then supply and demand is one of the best strategies that you can use in order to be profitable. That is in my own opinion, because I love supply and demand. It's so like an improvement from support and resistance. So that's why I love it that much, right? So what I'm want you to do is watch to the end of this video so that you get the most out of this video. I'm going to explain what supply and demand is, why you should trade it, how you to draw a supply, how to identify and draw your supply and demand zones, and how to trade them, right? So supply and demand is so like a mini version of order blocks of ICT, right? That's why I love it, because it's very simple and a very powerful strategy, right? So what is a supply and demand? So what we want to look for on a supply and demand is supply and demand are just key areas of interest, right, where there's been aggressive buying and selling that breaks the market structure, right? So what to look for, let's say, or let's look at what like over here, right? So this right over here is what we are calling aggressive buying over here, because the market just went up, it just rallied up, right? So we're in a downtrend over here, right? As you can see, we're creating what series of what lower lows, lower highs, lower lows, lower highs, so blah blah blah, lower lows, lower highs, right? So we broke this structure, right? Came back a little bit, and then we break this structure. This is the major structure point, right? And we broke it aggressively. So this is what we are calling aggressive buying and selling. So that's what we want to see when we are trading supply and demand, right? So we want to see those big fat juicy momentum candles, right? That's showing buying and or selling pressure, right? So that's what we want to look for, right? And there also has to be a breaking market structure, right? So alongside having what a breaking market structure over here, right? This was the major. This one is a little bit minor, right? But this breaking market structure with big fat juicy candles, these are the big fat juicy candles. Can't you see that big fat juicy candle over here, right? So that's what we want to look for, right? So that's the first confluence that we have to look for, right? So what we're just saying is, in a nutshell, just supply and demand. If you are supplying something, the difference between a supply and a demand is that if you are supplying something, right? Let's say you are supplying maybe what, pizzas or hot dogs, whatever you're supplying, right? So if the supply of those two things, let's say you are supplying hot dogs, right? If the supply of hot dogs is too much, right, there's going to be a drop in price, because everyone is selling a hot dog. Who is going to, if I reject, if I don't buy from you, I'll buy from someone else, right? So a supply is an area where the market is going to what is going to fall, right? So like this over here, this can be a supply zone, because the market what dropped down in price. If there's a supply of many things, right, the price is going to drop. And let's say there's a shortage of what, of pizzas, right? I'm the only one who has pizzas, so I can sell it at any price, right? So the market is, the price of that thing that is wanted by everyone is going to rise. So a supply is an area where we are going to what, we are going to sell, and a demand is an area where we are going to what, where we are going to buy, right? So that's the difference between what a supply and a demand, and that's in a nutshell that covers what a supply and a demand is, right? So why should we trade a supply and demand, right? Because supply and demand offers us a smaller stop loss and a larger TP, right? I think you see this very much clearly when we jump into how we trade this, but it gives us a chance to make the most money from the littlest, from the smallest risk, while risking what, the smallest amount possible, right? So that's why we want what, we want to trade supply and demand, right? So supply and demand, as I said, is a miniature version of order blocks or what, or ICT. That's why I think it's a very powerful strategy, right? So how do you draw your supply and demand zones, right? So if you want to draw a supply or demand zone, right, what do you have to look for first, right? So first of all, we have to look for a breaking market structure, right? So let's take this for example over here. Right, we've got this structure over here, right? We break it, right, with a lot of momentum, right? So unlike my favorite pullbacks, I think you know my favorite pullbacks. If you don't, then you need to subscribe to my channel, because I always talk about this, right? Where the market is going down, is slow momentum, it's just weak, it's just tired, right? So we don't want to see this when we want to mark our supply or demand zones. We want to see these flat pullbacks that just break the market structure out of nowhere, right? So this area over here, right, that's what we want to look for. It's breaking market structure in a fast way, right? So that's what we want to call what, that's what we call a supply zone right over here, right? So that's how we want mark a supply zone. So a supply zone, right? So let's say we are going down, like in this example over here, we're going down, right? So maybe we've created what a lower low, then we break that first, right? So what we want to do is a supply or demand zone area is just an area where there's so like either a consolidation or just a green candle, right? So since we are going down over here, if there's a green candle maybe over here, right, and maybe over here, right, just an area of something like a consolidation, right? All these two, both these areas, they are our potential what, our potential supply zones, right? So we want to see what a consolidation or an order block, right? So if you want to see those types of setups, right? So want to see a consolidation, right? So if you are marking order blocks, this would be your what you are marking, right? But in this case, it doesn't pull back to that area over here, right? And this also can be what your supply zone over here, but it gets broken, right? And it isn't respected, right? So then again, there's this over here, right? We've got a breaking market structure over here because there was this miniature structure over there, right? There was this miniature structures over here. They break this low, we break this low, right? So we mark that last green candle. Especially, I usually like to mark the last green candle, right? That's what I mark, right? So after we mark that zone, right? As you can see, when the market pulls back to that area, that's when we are going to be looking to sell. So this is a supply zone, right? And we want to mark that, right? So you can, to mark your supply zones, you're just going to be marking these small what green candles, right? These green candles over here, right? And if you are doing order blocks, that's where you go much into depth. You can even mark these candlesticks over here, right? There's I won't go much, I won't be talking about that over here, right? But if you want to go, if you want me to go much in depth, you can just comment in the comment section down below for me to talk about order blocks, talk about proper order blocks, right? Other than not supply and demand, right? So right over here again, we've got this area over here, we've got this area over here, it gets broken, and as you can see, this momentum is fast, it's fast momentum, right? So that's the area that we want to mark, right? So then we mark our supply zones. So we've got this area, so the market is likely going to respect either this area or this area over here, right? So those are the two areas that we draw our box on, right? So we mark that area over here, right? And you mark this area over here. So you mark that complete area, right? So after marking these zones, as you can see, the first one gets broken. So let me just delete this. It gets broken, right? The market doesn't give us a proper candlestick confirmation, right? And then for the second candlestick, right, as you can see, we mark from the bottom point to the highest point of that candlestick, right? So for the second candlestick, as you can see, the market slowed down in momentum. It's giving us wicks, it's giving us a consolidation over here. The types of pullbacks that I just like, this was this slowing down in momentum, right? So that's what I want to see on a pullback, right? So that's when we enter for our sales, right? Maybe you can draw what, maybe a little bit of trend line over here, right? And you enter when the trend line is broken, right? But as for me, I would my first entry would obviously be over here when there's these dodgy candles of being formed over here, those funny dodgy, right? And then this is what further confirmation. So I enter maybe 2 or 3 trades over here, right? When it starts falling, right? So that's what you have to look for when you are trading supply and demand, right? So over here, we just, the most important thing that you have to look for is a breaking market structure, right? So you just want to see our breaking market structure, right? So over here, we break this structure over here, right? And we mark out our potential zones, right? So this is our potential zone, right? Let me just use a box, right? So this is the last green candle before, right? So that hasn't been tested yet, right? So we have, it's better that we prefer the areas that haven't been tested yet, right? To mark so that we mark those zones, right? So right over here, this area, that's what you want to mark, right? This whole area over here, and as you can see, it gets respected, right? So that's that about summarizes how to draw and identify your supply and demand zones, right? Now, how do you trade them, right? So when the market pulls back in these areas, I think I preempted on this a little bit earlier. You want to see a consolidation, like, right? You want to see a proper candlestick formation, right? For us to take that trade, right? So over here, we've got this engulfing red candle over here. So there also was a valid entry over here. We've got this doji formation candles over here showing that the market isn't pushing up, right? This is another confirmation, right? So you can enter here, you can enter here, all this way, proper entry points. But most of the times, if it's consolidating, what I encourage you to do, guys, is if there's a consolidation that's like this, to make that trade profitable and to know if it is going to be respected, I want you to take your trend lines and you draw your trend lines, right? And you're only going to be entering when if that trend line gets broken, right? So you can enter on the trend line breakout, or you can wait for the pullback to the trend line, right? But the trend line breakout works best because usually after testing a supply or demand zone, the market just goes completely straight, right? It doesn't, most of the times it doesn't pull back, right? So if you are trading order blocks, it's better to just enter on the breakout of the trend line, right? So now for your stop loss levels, right? For your stop loss levels, as you can see right over here, right? What I want you to do is when you mark this order block, right? I am calling it order block just for the sake of this video. When you mark this supply zone, okay, right? I want you to place your stop loss slightly above that zone, right? So maybe I'll be placing it over here, but as for me, I'll place it above this previous high that was formed. It just depends if where the order block is, right? So for this example over here, I'll place my stop loss maybe around here, right? And over here, I'll place it maybe around here, right? And for this one again, right? This was my order block, so the previous high that was being formed, I'll mark maybe over here, but I'll probably mark here, right? So over here, that's where I would place my stop loss rather than putting it over there. This one is too far, right? So I'll mark this previous high over here, right? So if this area was reached, then my stop loss would have been hit, right? So you just have to move from your order block, you just have to move just a little bit so that you give your trade a room to what to play out, room to what to breathe, right? So that it plays out, right? So like over here, right, we've got a break in market structure to the upside. We mark this resistance over here, right? Where do you enter, guys, using this example, right? If you entered here, then you are stupid. Sorry to say that. Sorry, I'm just joking, right? But you have to wait for candlestick confirmation, as I mentioned, right? So after these doji formations, that's when you enter, right? So right, maybe you entered over here, right? And you also have this doji, and then after this green engulfing candle, you can also take your entry, right? And your stop loss, you place it below the previous low that was formed, right? So this is your potential stop loss level, right? Or in the just below that order block. But I don't encourage you to put it just below that order block, because most of the times with tariff, you know how tariff is, it will just hit your stop loss and then continue going up. Then for your TP levels, you're going to be marking the previous high that was formed, right? So we'll be marking this high, that should be your first TP, and then you what? Then you, that will be your first TP. Then you, after that, you'll be just adjusting your stop loss. You're going a little bit higher each and every time, right? So that's it for order blocks and how you trade them. And if you want to find a way that you can install in place your stop losses a little bit simpler, and you can draw your order blocks very simply, you are just using the same concept. I encourage you to watch this Fibonacci strategy that I posted, and if I forget to leave that link, then remind me in the comment section.